Hello, everybody. Welcome to this week's edition of Vishal and Company. Today, we're going to be covering this week's stock market action and a possible new bear market, the latest CPI and retail sales data, and the Fed president's rate hike expectations. We're also going to look at EQUITY.GURU's favorite company, Tesla, as well as Bitcoin's centralization problem, because we have our crypto connoisseur Joseph here with us in the virtual flesh and not in the ether, which is very exciting. I'm going to pass it on to Vishal because we have lots to get through.
Yep, for sure. Yeah, I'm excited about the crypto stuff, and it's good to have Joseph here. We'll take a look at the markets here first, and oh man, it's been a wild week. Just ups and downs in the market. Monday, it was a very, I guess, scary day. A lot of people were like, oh my God, the sky is falling. I just want to scroll in here so you guys can sort of see what happened on Monday. Again, folks, this candle was all red at one point. And then all of a sudden, near the end of the day, we got the miraculous bid up. And I'll show you on the Nasdaq because that's where, I was actually surprised the most. And I did write my market moment that morning saying, hey, we've seen crazier things. So I wouldn't be surprised by the end of the day, they pump this up and get the close above an important technical zone, which we'll take a look at because it's very relevant, but so is the technical zone actually here on the S&P 500. And I've been showing you guys this trend channel. Basically, I mean, it's been here for months. You've seen it on EQUITY.GURU, you've seen it on the show. You've probably seen it on other stuff I do on EQUITY.GURU, other videos I do. But this channel trend line, as long as this holds, we are technically still in an uptrend. And it's quite amazing that day, when we had that major sell-off, we basically got bid up right at that channel trend line retest. So things are still bullish as of now. I'm not changing my stance until we close below that. But of course, there's a whole bunch of issues why we could possibly close below that. And we'll talk about that in just a second. But the Nasdaq is where things got crazy and are still a bit crazy right now, because as you can see, we were actually very close to break below our tech or growth stock, Nasdaq, technology stock trend line here. And look at that miraculous bid up on Monday. If we had that close below that, basically the uptrend in the Nasdaq was over. But instead, we got this miraculous bid up, and they closed it freaking green on that day, which was absolutely insane. I don't think too many people were expecting that. And, it's just plunge protection team, that's what I'm thinking. Very, very crazy. But here we are even today. Today was a crazy day as well, because the markets were breaking below our channel trend line and this important support zone. And as I said, basically, even in our newsletter that we just sent this morning, if we get a close below this channel trend line, we're not looking at an uptrend anymore. But as of now, we have 15 minutes until the markets close. And they're going to reopen on Tuesday because on Monday it's Martin Luther King Day in the US and the markets are closed on Monday. But take a look at that candle, green. They bid it up and they are keeping it above our channel trend line. So as long as this, as long as price remains above this, we remain bullish. And, we got to talk about some of the fundamentals here. Monday, we had, Fed Chair Jerome Powell basically do his testimony to Congress. A bit dovish. A lot of people were saying he curbed his hawkishness. He did mention, we want to be finished tightening or selling off the balance sheet by March. But he did not mention anything about basically rate hikes. And the markets here have been essentially pricing in somewhere between 3 to 4 interest rate hikes or 25 basis point hikes. Oh my God, okay, by the end of the year. So I'm just looking at that 10-year yield here because I was going to say you got to keep an eye out on this market to determine where interest rates are going.
And there it goes.
And yeah, take a look at today's candle. That's ridiculous. So we are at 1.78%.
Just further to your comments about Jerome Powell, the appointee Brainerd, who is the vice chair, I think took up the hawkish torch. Basically stepped right in and said, we got a powerful tool. We're going to be using it. Right. And you got Jamie Dimon also predicting 6 to 7 hikes this year.
Ooh, wow.
It's not going to be an easy year.
Yep. So for all of those who believe that markets are propped here because of the cheap money, as soon as interest rates start to rise, if it's 6 or 7, that's going to be quite the substantial hike there. And not just Brainerd, but on Thursday, so yesterday, the reason markets sold off was because of Brainerd and also Fed Harker, who basically picked up the that hawkish torch again by saying, hey, look, I'm still seeing 3 or 4 rate hikes this year, and by the way. Maybe the inflation here is not necessarily supply chains. He sort of says that he disagrees with the transitory story that the Fed is playing out, that it's, likely to do with monetary policy and money printing. But of course, he's not going to mention that, right? He's just going to say we have to beat inflation. And nobody actually asked him that question. So
that's interesting that they're staying away from that, because it's and again, I understand that yes, the stimulus checks have essentially for me been the straw that broke the camel's back, because the cheap money has been produced for quite some time now and has just been funneled into the markets, creating the everything bubble. So that money policy, that monetary policy, is actually the underlying, as far as I'm concerned, the underlying effector that we're going to be experiencing a blowback from over the next 12 months and more. Even if it is a supply chain problem, you have knock-on effects and a tail on any kind of return to a recovered state. So we're in for the long haul here.
And one of your other favorite persons there, Galen, her name is Kathy Wood, actually just came out she came out this week saying that now she's actually investing for deflation. So now she's expecting, maybe cryptos to drop, stocks to drop, basically looking into deflationary assets or investing in a deflationary environment. So a quick sort of, change in her stance. And of course, we can take a look at her stock price. There's quite the deflationary aspect on the ARC ETF.
Yeah, she's one of the deflationary aspects.
But maybe we see a bit of a pop here on on ARC because the Nasdaq's staying up. But basically now we're from to taper or not to taper to hike or not to hike. And a lot of people are saying, hey, can the Fed actually hike in a weak economy? Because remember last week we looked at basically December employment numbers missed by a long shot.
Yes.
Today we got the U.S. retail sales for December, and usually December is again Christmas time. You're thinking people are going to spend money.
And jobless claims are also up.
Jobless claims from yesterday. Yeah, that's also up as well. So basically for the retail sales, the markets were expecting, a bad reading. They were expecting a decline of 0.1%. So, 0.1, that's okay. But instead, we got a pretty big miss, or a big dramatic miss at 1.9%. So the analysts basically got it wrong by quite a long shot here. And I think the surprising factor here is it was actually online spending, which took the biggest hit, which fell or plunged 8.7% for December 2021, which I think it's actually quite crazy because you'd be thinking people would be spending money for Christmas. And we've always heard that the reason why retail sales are dropping is because people are scared and they're staying home, so they're spending online. But that's not really the case here.
I think the fear goes beyond the pandemic, and it's a economic fear.
So you think people are saving money because they...
Yeah. They're seeing the end of the tunnel. Because basically, we've got some mixed banking numbers this year, or just this week as well, where you got some banks are going like, yeah, it's not going well out there. And then you got some banks who are making the profits, but basically, and they're not huge profits, just on loans. And with a hike, an interest rate hike, those loans are going to become toxic. You know what I mean? It's just, we're not really setting ourselves up for a great environment right now.
And, to further your point, maybe this plays a role as well. Inflation, again, the Fed is saying, don't worry about this. This is just temporary or transitory, and it should disappear by mid-2022. But to kick off the year, actually, this is for December, so we don't have January's inflation number yet. But December 2021 saw inflation rise 7% over the past year, highest since 1982. So it's still coming in quite strong. It looks like we're not at the peak just yet. A lot of people were claiming that last month's 6% was the peak, but now we're at 7%. So let's see what happens here going forward. And of course, a lot of people are basically predicting a lot of rate hikes because they say the Fed has to raise rates in order to combat inflation. But the way the Fed is seeing things is like, no, we don't need to because the inflation is actually due to supply chains. But it's confusing right now, right? Because you're hearing a lot of Fed presidents say they need to hike rates, but then people are going to ask them, okay, you said the inflation is because of supply chains. What is raising interest rates going to do to alleviate the supply chain? You guys are tricking us. It's because, it's the monetary policy and your money printing.
Yeah. Well,
that's the issue. So.
Jerome Powell's relative not about face, his softening of his stance was really due to the fact that he was getting recertified. Like, why do you want to ruffle feathers? Oh, right. Everything's good. We're doing all right. It's going to, it may seem bad now, but we're going to get this handled. Everything is going to be okay. The inflation will take care of itself. It'll even out. Supply chains will come back into play. The prices of products will come down and nobody has to worry. But the other guys, I think, to a certain extent, are still trying to maintain some sort of legitimacy for the department, going like, yeah, we're going to be doing rate hikes.
Yep. So just to end off here, in my part here, or on the...
You mind if I throw out a quick question?
Sure.
Now, for those of us with student loans who are up to our neck in debt because we spent most of our adult life in school. Now, what kind of timeline do you give the notion of raising interest rates? Like, how long do I have to pay off my debts, for example? From all the data you've seen.
Yep. Well, it's a good question because it also impacts real estate, right? There's a lot of people looking at, should we be locking in my mortgage rates right now? Right now, markets are predicting 3 to 4 rate hikes this year. So we're at 0.25. By the end of the year, markets are expecting we're somewhere between 1% to 1.25% in terms of rates, which means obviously, rates for loans are going to increase maybe by 50 basis points because there's that bit of a difference that the banks make profit in. And
as I said before, Jamie Dimon is also expecting 6 to 7.
6 to 7. So that would be
4.
Yeah, so that would be much, much more, right? So a lot of people are here thinking rates are going to go higher. Here, I wanted to show you guys this. So for March 2022, the market actually is predicting a rate hike, 89.5%. So again, this can change from now till March because we have a lot of time. But they are expecting the Fed to rate hikes by 25 basis points to 0.50. And of course, if it's 89.5%, it's basically already baked into the market. And if the Fed does not raise rates when most of the market is thinking they're going to raise rates, that's going to create a lot of volatility, right? So basically, from now till March, everyone is expecting the Fed to hike, but anything can happen, I guess, from now till March, maybe on the pandemic side or whatnot, that might change their stance. And I think the big question, I know we've talked about this many times, which is, again, why I'm sort of worried about that 6 to 7% rate hikes is how much can central banks raise rates without breaking the government and breaking the consumer who are basically in a lot of debt? I think that's the big question there. I know there's a lot of analysts that think we can't go past 1% anymore. There's some who think we can't even raise 25 basis points. So we'll have to see that, going forward. And basically those analysts think we're Japan, we're the European Union, where, they've cut rates for decades and they've never been able to raise rates because there's so much government debt out there where even a rate hike in the positive would break government balance sheets.
Now, here's the thing for me, we should not raise rates to a certain amount because yes, it will sever the economy. But the problem is that we actually need to. It's a necessity and it's a bitter one, and they're trying to put it off as long as possible. Nobody wants it. But the fact is that the entire global economy is dependent on this normalization, and it's going to be fucking painful.
I'll leave you guys there then. So we'll have to watch because I'm still one of those guys that think these markets are basically being propped on their cheap money. So, what we're seeing the price action is basically because the markets are worried that oh, holy crap, the central banks might actually raise rates now, and they're panicking, right? So we got to watch that going forward. But as I said, anything can happen from now till March that could maybe change the Fed's, or they might kick the can down the road if something happens. If government has to all of a sudden spend more money, or, as we said right now, basically these bad retail sales. I know CNBC today was actually talking about, hey, does this bad retail sales number and the bad employment number, does that now basically nullify any chance of a March, rate hike? But for now, not yet, because the probabilities are still high. The markets are still pricing in. So keep an eye on the Fed futures going forward. And I'm sure we're going to talk about this many times on the show every Friday.
Start paying off your debts, kids. Personal debts, get rid of them. The credit cards, get rid of them, man. You're going to get screwed. There we go.
So what about what's going on in crypto or Tesla, wherever you guys want to take it next?
Let's go to Tesla, and then let's end on crypto.
Okay.
I'm going to pass it to our Tesla man, Galen.
Okay.
Okay, Galen, take a deep breath. Deep breath in.
Don't get too red in the face.
Go.
All right. So you got analysts taking a crap all over Ford for having a $100 billion valuation, considering the fact that it actually earned as much as Tesla did with a 1/10 of its market cap. And it's going like it could plunge as much as 52% because it's way overvalued. What the fuck? Where is your analysis taking place? Like, who are you looking at? Tesla is the worst offender for this, and somehow people are saying, yeah, it would be a good idea if they traded at 100 to 1. What kind of shit are you talking about? Now, the holes are already being shown in Tesla's corporate structure. They've pushed production of the Cybertruck yet again to early 2023, and some are speculating that this is an indefinite push. We may never see this truck hit the road, because by 2023, we'll already have enough competition out there that it'll make it incredibly difficult for them to insert it in. So what does he do? He dances around and says, you know what? You can buy my crap on my website for Dogecoin. If you're dumb enough to actually part with assets to buy shit from Tesla that won't be worth crap, to allow this guy to secure more assets for himself, you deserve to get suckered. Seriously. It's time we police this guy.
I remember back in the day he was selling the tequila bottle, right? There was the Tesla tequila, and I think there was a Tesla flamethrower as well that sold out.
Notice how he's not saying you can buy my cars. That has to be a good indicator that this is a scam, that you are indeed being manipulated by some jackass that wants to see the value of his assets go up. Because basically when he called it, the Dogecoin climbed. Incredibly so.
Buy brand merchandise.
Yeah, that's exactly. Brand, your red shorts. You want to buy the red shorts for Dogecoin? Be an idiot and do it. These are still assets. They're not currency. Don't be suckered into this. So I can't stand the guy. I think that he's a complete fucking sham. He's a braggart and a fraud. And it's about time we started poking holes in him. Seriously. Not for any ethic or moral reasons. I have got no problem in that. But, right now, what is it? Grimes has a song calling him the player of games. You have to go by the rules to be a player of games, to be an actual really crafty player. If you cheat, you're the king of cheats. And that's basically what he is, considering that he actually cheated on her, and that's the reason why she left him. It wasn't because they just decided to part ways. Him and Amber Heard decided to get it on, so she left. Now,
Amber Heard?
Yeah. I just dish that stuff aside. Let's just move on. Let's talk a little bit about cryptocurrency, since, I already just sort of stepped my foot in it.
I was just going to say, it was a perfect... that was a perfect transition. I couldn't have done better myself. Let's do it. Joseph, Bitcoin, what are your thoughts?
Well, you can actually look directly on the screen and see where my thoughts are angling from. I mean, they're down from a considerable all-time high, and I think there's a solid reason for that. I think that the market has finally woken up to the fact that Bitcoin. I mean, we had the Chinese diaspora last year, but it did not solve the decentralization problem. Now, when Bitcoin miners left China in last year, it split up the hash rate, considerably, I suppose. I mean, it did produce some variety of, small terms, small scale solution to the problem, and they had anywhere between a 75 and an 85% of the hash rate at the time. Now it's split up between two different countries. With the United States having 38% of the hash rate and Kazakhstan having 18%. That's still 50% of the hash rate, the ability to make new Bitcoin split up over two different countries, and one of them being the hegemon, basically, the big gun. I mean, I understand that these companies are in the business of making money, and they're going to go where the money is, where they can get the best deals. But unfortunately, as we're beginning to see with Bitcoin being where it is, very close to losing all of the gains from last year, having it centered in a country in which we have the potential for armed combat to happen in the streets next to where your Bitcoin is being mined, might not necessarily be the best option for the continuation of the currency. Now, back in the day, Bitcoin used to be the kind of thing you could mine for your mom's basement, and all of your friends did it. And unfortunately, it's gotten so big. I mean, as you can see, scrolling past, that is probably the picture of inside of, let's see, it's in the middle of Rockdale, Texas, so that's probably Riot blockchain. Whinstone US split Bitcoin mining facility in Rockdale, Texas. That is a Riot blockchain. I don't even have to get verification. I already know that. Now, I have my own problems with Texas. That's a separate story. But as you can see, they're big, they're huge, and they're only done by the big guys now. Like, I got into a conversation the other day on Facebook about this guy who wanted to find out if he could still mine Bitcoin from his mom's basement, and say, you can, but you're not going to make any money. In fact, you're going to lose a shit ton of money.
Yeah, you'll pay more for power.
Exactly. You pay a ton more for power than you will from mining like a tenth of Bitcoin.
Yeah. Joseph, is it possible with Ethereum now? Can you still do that at home, or has that gotten so big as well?
It's too big. It's too big. Like Ethereum doesn't have any ASIC resistance, which means that you can only mine it with ASICs, which means that you need to fill up your house and probably your neighbor's house and your neighbor's house with ASIC rigs just to get one Ethereum every couple days. So it's not really, it's not worthwhile. If you want to make money from mining crypto, you got to look at whatever new coins on the block. And
now, Joseph, I got a statement and a question for you. Now, it seems to me that the generalized focus of all cryptocurrency at this point is the mining of the token, which in some senses seems to be counterintuitive because it produces, as you said, sort of a centralization and people just trying to make fucking money. Now, what are your thoughts then on Hashgraph and the idea that perhaps using that kind of a data set and Ghost protocol, I think it's, or no, the Whisper protocol.
Protocol.
Yeah, where you have all of these nodes that just simply communicate without any kind of computing power and know what's going on in the other node and just close the node. And basically you can run this whole system off of your phone. And that would be a true decentralization because it would be everybody's phone. It'd be very hard to commandeer all the people's phones without some sort of violent insurrection. So
what I think about Hedera Hashgraph is not enough people know about it.
Okay.
It should be much bigger than it is because actually you just pretty much laid out how they mine. I mean, that is basically how they mine. They have what is it? It's delegated proof of stake, if I remember correctly.
Something like that.
But it's actually done through but it's actually done in a words are failing me.
That's okay.
I'm having a day. But it's actually done without necessity of all of the electrical spending, which you'll find in, of course, proof of work, but even some proof of stake machines.
Yes.
Like you literally can do it from your phone.
Yep.
But like, I don't know why more people don't know about this. Maybe they don't get on with the right company and they don't push them right or whatnot. Mm-hmm. But I mean, like this company is one of the core few companies that are actually worth looking into when it comes to cryptocurrency.
It's my feeling exactly.
Specifically because of the way that the consensus mechanism works.
Yeah. And for me, it pulls the focus away from the token in and of itself, which I think is an end result of closing a block and completing a function, right? The idea of DAOs and content control, data control, those are the real hard functional aspects, as far as I'm concerned, from the world of what we call cryptocurrency. I think blockchain is the real value proposition. That's me.
For those listening in, a DAO is the Decentralized Autonomous Organization, which is the organization behind a particular protocol, or a coin, or a token, or even a function on the function on a DeFi network, like a liquidity mining or something. I don't really know where to go from there. I mean, if we look at Hedera, they're almost completely decentralized, whereas one of the principal problems with Bitcoin is that they are completely transparent. A lot of people want to tout that as a good thing. It's not. And I think folks who are investing in Bitcoin in the next few years are going to realize how much of a bad thing that is when companies can peer in and one of my biggest problems when it comes to completely transparent blockchains is the fact that information is not just available to anyone looking in using the right technology, it's available to any company looking in using the right technology, which means that if you, for example, were to put your medical records or your genetic testing records on a blockchain, specifically so you could, have a easy to keep ledger so you can keep track of certain things. It doesn't have privacy settings. It's not a private blockchain like it's on one of the public ones. Then there's nothing stopping a insurance company 20 years down the line having a look at your genetic testing, finding out that you have the latent gene for Huntington's or something, and then deciding to jack your rates based on the information which is freely available because you decided to put it in when it was 2020, and by 2045 they had full access to it because governments usually like to do things like that. I mean, this is a lot of things that people don't think about when it comes to blockchains, is that they are excellent at storing information, and people are not always so excellent at what they do with it.
No, we're basically bastards.
Yes, we're basically bastards.
We are pretty much out of time. I'm going to give Vishal our last word.
Yeah, we don't want to end off by saying we're all bastards.
No, I could have just said, and that note, goodbye everyone, but I thought
I'll cop to it. I'm a bastard. Why not?
Okay, yeah, so it's been a wild week this week, and I think this sort of volatility in markets are going to continue. I'm still looking at the crypto space, like Bitcoin specifically, as like a risk-on asset. I find that it moves very similar to the way the stock markets are moving. And even like today's daily candle, you can see was red at one point and they've bid it up green. And basically, I'm looking at both crypto or Bitcoin specifically and the stock market to move in tandem here. So going to be a big week next week. And as long as we hold this channel trend line, we're technically still in the uptrend, but I'm sure in future shows, we're going to be talking about the Fed and what the market thinks the Fed's going to be doing up in the future.
Perfect. Thank you so much, everyone, for watching, and we will see you next week.
Bye.
Here, guys.